All right, folks, welcome to Module 1.4. In this module, we talk about different types of business activity. For the purpose of this course, we separate business activity into three different types of activities: investing, financing, and operating activities. Typically, our operations start through financing activities, where we'll borrow funds or issue shares. All right, welcome to Module 1.4, where today we're going to talk about types of business activities. We isolate three different types of business activities based on investing, financing, and operating. Typically, our business cycle starts with financing activities. This is where we actually borrow cash from lenders, from banks, or other lending facilities. Or where we issue shares to shareholders to create capital that can then be used within our organization. So financing activities typically include Welcome to Module 1.4. We're going to talk about types of business activities. We'll talk about three different types of activities that occur within our organizations, and typically the cycle begins with what we call financing activities. That's where we actually bring funds into the organization, either through borrowing from lenders or by gaining capital through the issuance of shares, so exchanging shares for exchange of cash. So the finance activities are really what set the foundation of our organization and bring funds in order for us to execute our investing and operating activities. Our investing activities are those that are related to the purchase or sale of longer-term assets, such as properties, plant, or equipment. Operating activities are the result of our day-to-day activities in the business. So these are the things that we actually went into business to do. They're the things that generate our profit. So those could include revenues, expenses related to our regular ongoing operations. We break those down a little bit. Again, our investing activities, a couple of examples would be, if we were a company such as Honda, we were to purchase some new automated equipment for an assembly line. That would be an example of an investment activity where we purchased equipment. If we were to purchase a new photocopier, again, purchase of equipment. This could also include sale of long-term assets. So if Bombardier sells their factory, that would be considered an investing activity where they've exchanged a long-lived asset for cash. In this case, their factory would be considered a plant. So any long-lived asset in this, as we look at this definition of what a long-lived asset is, they're physical items that are expected to be used in the operations of an organization for a long period of time. Okay? Typically, we purchase these long-lived assets from either financing activities, so borrowing money, or issuing shares for cash, or through the result of our operating activities. So for example, after a few years of generating revenues and profit, we can use that profit to then go out and purchase our long-lived assets. So that's how investing activities kind of come through. Again, our financing activities, examples are when we borrow money or when we repay money to lenders or creditors, or when we issue shares or buy back shares that we've issued in the past. So for a few examples here, if we're an organization that took out a mortgage, again, we're taking on a debt or an obligation. If we issued a bond is another example of a form of debt. Typically, a bond is a contract that we get into with a purchaser that says basically, I owe you your money back plus a regular payment of some form of interest. Okay, and we could also take out a bank loan. So borrowed funds, oftentimes an accountant will classify them as bank loans, mortgages, notes payable and bonds payable. Again, notes and bonds payable are simply a contractual obligation that sets us up to repay some funds to someone else in the future. Okay. Typically, our financing activities include borrowing money to purchase an asset or to finance our operating activities. So, for example, if our expenses are more than our revenues and we're operating at a loss, we may need to borrow money so that we can continue to operate our organization. That brings us to our last activity of operating. And operating activities, again, are those day-to-day activities, the reason that we exist. So, for example, if we're a burger joint that generates $100,000 of revenue from our hamburgers last month, that's a good example of an operating activity. The expenses that are related to operations, so paying our employees, paying for supplies or stationery, all of those types of activities are related to the actual day-to-day activities of the business. So typically our operating activity include accounts called revenues that are generated from sales activities, as well as expenses, which are basically the use of funds to sort of make sure that we can generate revenue. Operating activities can result in a profit or loss to an organization. So when we generate income, we can use that income to purchase new assets or repay some of our debts. So we can use the operating activity results to either go out and do some investing activities or financing activities. Or if we run a loss, we may require financing to keep ongoing operations. Right? So our operating activities rely on our assets of the organization, so those long-lived assets, to facilitate our day-to-day activities. So what we're really trying to say is that all of these activities are interlinked inside of our organizations, and all of them play a critical role to the success in our businesses. So for further sort of summary and discussion, please feel free to read this section of your book and work through the next couple of exercises to ensure that you understand the difference between these three activities and how they work together. Thanks so much, and happy studying.